So good morning, everybody, and welcome to our webinar on the Affordable Credit Scale-Up Programme. I'm Sasha Romanovich, and I'm the CEO of Fair for All Finance. And just first of all, probably just to put across a few bits in terms of housekeeping. Hopefully we'll be able to have everybody having sensible internet access, but first of all, we will be recording the call, so if you're not comfortable with that, I suggest that you drop off and contact us separately, but we're just very mindful that not everyone is able to make the webinar, and we want to make sure all of the information is made available to people. We've also got a live Q&A running, and so to the left of the telephone there is a little sort of question comments box. In there is the Q&A, and you can add in comments as we go through the webinar, and we will be looking at them and publishing them as we organise them, and we'll be both typing in replies as we go, as we answer them to you live, but we'll also be producing a Q&A afterwards, which will go to everybody who is applying to the programme, so that everyone has complete information. What would be great is, as we kick off, one of the things that we can't see is organisations who have joined and where you're from. So if you were able in the Q&A, and thank you, Karen O'Reilly, I can see has already put in a question, but if you are able to put in your name and the organisation you're from, that will help us incredibly in making sure that we can do any follow-up that's needed appropriately to make sure that we're giving as complete information as possible. So in terms of the session today, I'm going to give a brief overview and introduction, and then I'm also going to introduce the team who are leading the programme, so that you understand the individuals that you'll be working with as you embark on a journey with us. And then Tom Lake, who has been programme lead, is going to give a bit more insight in terms of the programme itself, probably a short 10 minutes or so, and then the rest of the session will be given over to your questions, and to make sure that we can really help you understand and set yourselves up to really get the best out of the programme. So that's the format today. We've allowed an hour for it, and then afterwards, if there are specific follow-ups, we will do our best. So just in terms of context around Fair for All, we were set up back in February 2019, and over that period we've now grown to a team of 7 full-time people, supported by some amazing secondees who assist us in delivering our programmes. And the purpose of us being established was really about how do we increase the financial well-being of people in vulnerable circumstances through ensuring that they've got access to fair and appropriate financial products and services. And this was really focused on the understanding that mainstream financial services is very much designed to serve people with predictable lives and predictable incomes. And in that particularly since the last financial crisis, that a significant number of people in the UK had fallen out of mainstream provision, and many had fallen into high-cost credit providers in particular, which was actually causing detriment in many instances to those individuals. And so the brief for us when we were set up was really to be able to look at 2 things. One was the needs of vulnerable consumers, and 2, the products and services they needed to build their financial resilience, and then to see how we could address the market failure that meant those people weren't being properly served by the market at the moment. Affordable credit was our starting point, because that was identified as the real sort of gap in terms of the market that was causing the most significant immediate pain. And our premise here, and the premise behind the programme, is really working with organisations to do 2 things. First of all, to prove that it is possible to serve people in vulnerable circumstances in a way that actually builds their financial resilience. And so that credit is very much used as a tool to enable them to access essential services, to smooth incomes, but then also to take the stepping stones to actually build themselves into a more resilient position. So that framing in terms of what we're trying to achieve, I think, is particularly important. and proving a sustainable model from which we can develop best practice that then effectively influences the wider marketplace to adapt those practices such that we're able to deliver at scale to meet the need is critically important in what we're looking at. So that was the first sort of critical aspect of really being able to prove a model. The second bit is, well, how do we actually then build scale and capacity in that market, having proved the model? And so this programme is really designed to address both of those aspects, to both prove the model, so building capacity and supporting organisations to develop how they service customers, develop products that are better designed to meet their needs, to ensure that you've got customer journeys that are smooth and efficient and remove friction from the journey, which is why sometimes people go to high cost credit, because actually it's easy. And also to look at the underlying operating model of how you actually work so that you can actually afford to deliver really well. So that's the sort of the premise of the programme, is really working with organisations to help them on that journey to prove the model and to scale so that we can address the market at scale. So that sort of premise, I think, is quite important. Many of you will have seen just the week before last that there was an announcement that additional funding had been allocated to Fare for All, and I want to just say a few words in terms of our funding and what that means for this programme, both in terms of quantum of support and the structure of support that we're able to give to people, also in terms of specific restrictions due to the source of our funding. So in terms of our funding, when we were first established, £55 million of dormant assets was allocated to Fare for All, of which 20 million we had allocated at a board level to be applied in the scaling and the development of the affordable credit sector. With the additional funding announced, effectively there was an additional £40 million that was announced to us. That is really giving us the opportunity to do more with this programme, and in the first instance we have allocated an additional £10 million of funding into this programme alongside the £5 million to the COVID Resilience Fund that many of you participated in, and we'll be continually evolving where we invest to support the development of the sector, and we'll come on to that, I think, as we go further on. I think the key thing probably in terms of the source of our funding, the way the dormant assets works in terms of the regulation, it is allocated by country within the UK. So our allocation is allocated to England and therefore needs to benefit organisations that are significantly impacting people in vulnerable circumstances in England. What that means is if your operations are solely in Scotland, Northern Ireland or Wales, you unfortunately won't be eligible for this programme. However, we are continuing to look at how we collaborate with the governments of the devolved nations to see if there's a way in which we can work with them so other organisations in the other countries can benefit, but at this stage our funding is solely for those organisations who are predominantly serving England. If you're based in Scotland and actually have got significant service in England, then you could be eligible. So just in terms of that, to get that up front, because it's a question that we get a lot. What I'll do now is, rather than me sort of spending too much time, is probably say two other things before we go through. First off is that this is very much a programme. It's a programme to support people in terms of your development. So I know a lot of people have been in situations where you've gone for sort of straight funding applications and you're asked, what are our criteria for getting some funding? What we'd ask you to think about as we go through this is to reframe that. What we're wanting to do is to support organisations with your growth plan of how you see that you can extend your impact significantly in serving people in vulnerable circumstances. And the programme is quite an intense one because it gives the opportunity for us to do a deep dive into all of your different areas to move forwards. So just have that frame in your mind. Our funding typically where we identify funding as appropriate will be equity or grant. Debt, we are working with other organisations, but effectively what we want to be able to do is support achieving leverage debt on the investment that we put in. And so debt funding is not part of the package that we put together in terms of support. It's collaboration with others that would deliver that. And then the final point, which I also made in the video, which you may or may not have had a chance to look at, which my son helpfully helped me film. It's great. We're sort of all discovering family members with new skills as we go through the COVID-19 crisis. Final point I want to make is that we are aware that consolidation in the sector is a great opportunity, sometimes in terms of really sort of reducing or spreading the sort of the back office costs to enable better efficiency in terms of delivery of services. And so we would very much support applications where maybe a number of organisations would like to come together and have support in that programme. What I would recommend is if you are a number of organisations who would like to do that, to talk to the team before going into the application process, because the process probably isn't as easy to navigate if you're looking at doing that, but we can guide you through how to make it work for you. So those are sort of my overall headline comments, and I'm always looking at my team to see whether I've said too much or too little, but they're very patient with me. So hopefully that gives a sensible frame in terms of what we're doing. So what I'd like to do is just introduce you to the team who would be working with you. So first off, I'd like to introduce Holly Piper, who has joined us on Monday this week, is our Head of Funding, Finance and Investment. So Holly, would you just like to say a few words just to introduce yourself and your role on the team?
Yeah, hi everyone. So as Sasha said, this is my first week as Investment Director at Fair for All Finance. I'm delighted to kind of be joining the team. I'll be taking overall responsibility for this and other funding programmes. And my background's in supporting social organisations, charities, community groups, CDFIs with social investment, so debt and equity. So I ran a large UK social investment fund until very recently, but I'm really excited to be getting up to speed at Fair for All.
Brilliant. Thank you, Holly. And next I'd like to introduce Tom, who's been leading the programme and is also our head of system change and impact and policy and strategy within Fair for All. So Tom, can I get you with that long trail? He's been carrying lots of different roles. So Holly joining has been a wonderful relief to him. So Tom, can I just get you to introduce yourself briefly?
Thanks, Sasha. Sure. Hi everyone, Tom Lake. I'm Head of Policy and Strategy for Fair for All, and I've been involved since the start, really, from when this was just an idea in government, and I've since moved across from the civil service and DCMS to lead on policy full-time here. So I've been programme lead so far, and I think I've worked with many of you and really pleased to do that going forward too.
Brilliant, thank you. And next I'd like to introduce Kate Pender, who is seconded to us and is our acting lead on operational excellence. So Kate, would you just like to say a few words?
Morning everyone, great to see so many of you here. So I've been involved with Fair for All since the middle of last year and was really delighted to lead the diligence team looking at the organisations that we worked with in the first part of this, the pilot programme. So really pleased that we've been able to roll out this follow-up to that with a bigger and bolder ambition and lots of learning from what we did in the first round.
And Kate has got significant experience in development work with organisations in the UK and overseas. So I think she brings some really great insights in what it really takes for organisations to scale and grow. Next, I'd like to come to Neil Alexander, who is seconded to us from Carnegie and giving specific support in terms of the customer service journey and social impact. So Neil, a few words from you.
Hi, good morning everybody. Hope you're all well. As Sasha was saying, I work for Carnegie and I'm seconded over to this piece of work. And you all know better than me that credit is an emotive subject, particularly credit to low-income consumers. And This is very much about a programme where the needs of the borrowers align with the motivations of the lenders, both in terms of the credit that's issued and the additional gateway services that are offered. So looking forward to working with you all.
Thank you. And next I'll come to Becky Clayton, who is the Fare for All Head of Operations, who works magic alongside Temi and Finn in actually getting systems that work to be able to get you all in. So Becky, would you like to just say a few words in terms of your role and how you can support people as we go through this process?
You might be on mute.
Oh, I think you're muted.
Hi everybody, apologies. As Sasha said, I look after the people, processes and resources at Fare for All, looking after all the operations. Many of you I've already seen or spoken to as part of our COVID programme, and I will be supporting the team with the Scale Up programme and in charge of making sure that the processes all run smoothly and supporting on kind of the application and all of the different phases of due diligence as we go through. So if you're part of that programme, I'll probably be in touch with you at various points and happy to answer any questions that you have or direct you to the right place.
Thanks, Becky. And then if I go to Temi, who is our office manager and marketing coordinator, and also organises me, and she looks strangely stress-free from that experience. But Temi, would you just like to say a few words, because I think she's particularly adept at helping people who are struggling to access into systems. So Temi.
Yes, hi everyone. I'm Temi. I'm, as Sasha mentioned, the EA Office and Marketing Coordinator. So I've been supporting the team, just trying to help everything work smoothly. So if you have any issues using any of the systems, just drop an email to hello@Fare4All Finance or programs@Fare4All Finance, and we will make sure we get back to you. Thank you.
Thank you. And then last but not least, I'd like to introduce Finn, who is policy and researcher on the team, who is doing a lot of the work just in terms of drawing out the themes and also supporting in terms of communications throughout the programme. So Finn, would you like to say a few words in terms of your role and your background?
Thanks, Sashi. Basically said it there. I'm a policy and strategy advisor. I'll be working on like research and policy around the programme, making sure that, you know, what we take what we learn and turn it into good policy and recommendations for the rest of the sector. And I'll also be supporting on comms.
Brilliant, thank you. I can see there are already questions coming through. So if you've posed a question, if we're not getting it to it immediately, just be confident that we're managing them through, and we'll just try and keep it through in terms of the flow of it. And so what I'll be doing now is I'm going to hand over to Tom, who's going to take us through the headlines, and then in the background, I am now shifting to Copilot, where I'll be just making sure that all your questions are picked up as we go through. So we'll just try and keep it in terms of a sensible flow and keep putting the questions through, and we'll publish them as they're answered. If that. Tom, handing over controls to you.
Thanks very much, Sasha. That's great. Hi everyone. I won't talk extensively about this as an overview, because what we want to do with the rest of the time, we've got 40 minutes remaining, is prioritise answering questions that come from you as the group of potential applicants, and just making sure that everything is clear for you. But I just wanted to say a few words about the programme headlines before we get into the Q&A. As Sasha said, this is a programme focused on scaling up provision of affordable credit, and we use the word transformation quite a lot at Fare for All, and we want to focus on transformation. We want to focus on affordable credit serving many more customers than it does currently, and getting to a point where it can be competing with high cost credit and become more of a mainstream option for customers. So that the programme is ambitious, and we're seeking ambitious leaders to come into the programme with us on this journey. The programme objectives are to help meet the 10 times growth challenge for provision affordable credit, and we frame that very much in terms of the size of affordable credit provision right now versus high cost credit, and we have an ambition to make affordable credit available to customers when they might seek a high cost option alternatively. As Sasha said, we want to develop a model of sustainably serving customers in vulnerable circumstances with affordable credit, and that is very much focused on financial well-being every time. So it's not just about the credit product, it's about all of the wraparound tools and support services around that. And lastly, we want to develop the tools and assets which will enable the sector to scale as a whole. So this won't just be about the organisations that eventually come on the programme. What we're going to do is use the learnings from working with those organisations to try and develop ways that the whole sector can benefit and share learnings of best practice. So it could be that one organisation is particularly good at collections, another one is particularly good at loan assessments, and we want to share the learnings from that. As an overview of the programme, I think it's important to say that it's quite an intensive programme to come onto, and the experience of the organisations who worked with us previously was that it was incredibly in depth, but really valuable to have a team looking across your organisation and looking at what it most needs to kind of get to the next level of growth and scale. So we should say that it is quite an in-depth programme, and we intend for it to run from obviously around now until the end of the year. So there is an initial assessment before we bring organisations onto the programme, and then a few months of that detailed due diligence work before we expect to be able to make recommendations to our board in November, December time. And it's very much tailored to what an organisation might need. And we've seen from our experience in the sector that it's not the case that every organisation can take on significant equity to scale right away. And we want to make sure that it's the support that we recommend is right for each organisation that we work with. So that could be long-term patient capital in the equity form as Sasha's described. It could be grant funding for areas of organisational development, as we've identified here, such as operational excellence and technology, governance and leadership. It could be finance and system setup. It could be marketing, customer insights and product design. So we can be really flexible around this, and we want to make sure that what we give to the organisations that are successful is appropriate to them. Lastly, what I just wanted to say before we get into questions is that we'll be really focusing on obviously the kind of base of where the organisation is right now that comes and applies to us, but we want to see growth plans and ambitious growth plans. So please let us know what they are, and what I'd say is really important in there as well is that the growth plans are kind of thought through to a good degree. So in terms of inputs from the organisation and the kind of organisational capability and resources and different funding required to deliver various elements of growth. That's really important, as opposed to just kind of having a far-reaching number that doesn't have the logic behind it. It's also really important that the organisations that we work with are sustainable. So one of the things that we'll be looking at in the assessment process is both recent profitability and also what goes behind that profitability. And in particular, we'll be looking at your cost to income ratio. Quite simply on that, we'll be looking at the amount of pound cost versus the amount of pound income in the business. And at times we've seen that where it's over £1 of cost to £1 of income, sometimes like 1.2 or 1.3. In those cases, we wouldn't see that as a sustainable organisation right now. And what we'd need, therefore, from the leadership team is narrative around how that will get to a point of sustainability to meet a growth plan, because we are thinking about sustainable delivery of affordable credit. I think I'll leave it there in terms of the overview. I can see there's been a few questions specifically about the threshold of loan book size that's appropriate to come onto the programme. So we have said that loan books should be 2 million in size to be eligible for this programme overall, and that's because we want to see a track record of delivery and sustainability, and also a track record of an organisation being able to get to a point where significant growth is possible. And from our experience, we think that 2 million loan book size is a good indication of an organisation reaching a decent amount of scale so that the next stage can be deliverable. However, we're not going to be very hard and fast about that. So if you're slightly away from the number and you see a trajectory where it's, say, within the next kind of 6-9 months you'll go over 2 million, or if you're working with others that mean you're over that size, then we are happy to look at the application. But I think because of the number of organisations that we expect to be interested, it's likely that in those cases we'd have to approve it by exception and take a much closer look at the other elements. So it is possible that we'll bring you on if your loan book is less than 2 million, but we do have that as a kind of benchmark for a reason. Okay, so with that, I think let's jump into the Q&A. And Sasha, between you and I think we can go through and read these and divvy them out. So
yeah. What I might do is pick up. I think it's Enzo has just asked an affordable credit, which I will publish because I think this is maybe a bit of a framing question to the whole discussion. So I'm just publishing that through, which is really why we think affordable credit has failed to reach a large audience so far. And I think there was also an earlier question just in terms of whether we'd actually built our programme based on the considerable research that had already been done on affordable credit providers. So what we will do, and Temi, maybe if you could do this, if you could add into the thread a link to our report on transforming affordable credit that was published in February 2020. Effectively in there, what we did was drew together all of the research that had already been done, and we had then also built a theory of change working with a significant number of people working in this sector, from debt advisors to academics to people in the affordable credit sector to foundations. So a full gamut of people. And in that process developed a theory of change in the sector, and then used our pilot programme really to test and refine what we were seeing in there as the key levers of change. And so that led into the 5 areas in terms of system change and impact, funding, finance, investment, markets, consumer insights and product design, operational excellence and governance, leadership and talent as the key areas that would actually be essential to pay attention to in both building capacity and getting organisations to a place where they could really sort of move through the scale-up phase of an organisation. So an awful lot of research has been done. You'll be really glad to know that we've built on that, and we're continuing engagement with all of the trade bodies and various in the sector to get real insights so that we continue to develop and evolve our programme. I think the other question that was asked was this one in terms of why do we think it's failed to reach a large audience so far. I think the critical aspect is really about we'd identified really sort of looking at it in a number of different aspects. I think you've got to look at it in terms of a supply and demand perspective, which again is outlined in terms of our report, which is actually saying that there are some supply side constraints which have been actually availability of capital for organisations to scale and expand, appropriateness of product in terms of building people's financial resilience, attractiveness of product, and that includes the ease of access of that. One of the things that I think probably many people will recognise is that high cost credit providers have made it a pretty frictionless journey for people in terms of accessing products. And so thinking from a customer perspective, how they access things, I think that's really quite important. So those have been things very much on the supply side. And then on the demand side, there's awareness of, do people actually know of affordable credit as an option? And I think that we're all aware of the significant advertising budgets that some of the high cost providers have been able to spend. And I think that being able to really draw together some concerted work to raise awareness is a key part of the wider work that we want to be doing. Be very interested in people who'd be interested in working with us on that. And also access, which is, in terms of people actually then being able to access credit so that the credit decisions are appropriate for them, that there have also been challenges there. So I think it's probably not a simple one, and so I think it's very much in terms of that supply and demand. But do take a look at the report, because I think that'll give you a little bit more insight, both in terms of the work that we've built on the overall theory of change, and then how that has then informed the key areas that we're focusing on in terms of this programme. So what
I can see a couple of questions there that I could take, Sasha, perhaps.
Yeah. So if you want to take those, I think there are some just in terms of bringing people together and scale like that. So do you want to take those through? But Enzo, hopefully that's answered your question.
Yeah, great. Thanks, Sasha. So Matt, your question about COVID having impacted your process of developing a strategic plan, and then whether this is the kind of only opportunity to engage, or will there be other occasions? So we obviously understand the impact of COVID, and that this is a difficult planning time, and that there's a lot of uncertainty. What I would say is that if from our description it sounds like this is a bit too kind of soon for you to come into it, then there will be other opportunities to engage with us completely, and we probably expect to be bringing on more organisations next calendar year as well. But if you do apply, please do give us what you can right now. I think in the first round of applications, it's a description of your growth plan, and then midway through the summer, we'd be asking you to upload the detailed costed growth plan. So it is a phased approach, so there is a bit of opportunity to take your time and to develop that a bit more. But as a headline, what I would say that if it's not the right time for you, there are definitely future opportunities to engage with us. And then Clive,
while Tom's picking up the next point, I would say that, I think we get a lot of questions of, is this the only opportunity to get involved? Probably worth saying that we've been set up with effectively an intention of an 8-year time span, in terms of that being a sensible amount of time to really affect significant system change. And so we're going to be continually developing how we can support and develop work with existing providers and beyond as we go through. What we're trying to do is just focus on specific areas as we go, just recognising the pace and scale of the team and wanting to be able to be quite agile in learning as we go, so we can continue to develop and tailor our programme. So if it's not right for you right now, don't worry, there will be other opportunities, and your ongoing feedback of what's helpful. And we have bi-weekly calls with the trade bodies of responsible finance, ADCOL, and input from the other credit union bodies, which gives us really helpful ongoing insight into how we continue to develop our programmes.
Great. And then there's a couple of questions about mergers. So let's try and take those together if we can. So just as a principle of this, I think what we want to say here is that we are really interested in collaboration, particularly across the credit union sector. We've heard real success stories of organisations coming together and sharing both resources and bringing together common bond areas to bring efficiencies, grow an operation, and deliver affordable credit to a lot more customers. So we are very much interested in approaches from organisations either looking at mergers or in the process of doing that. So Clive, your question about being in the middle of that merger and what data you therefore have on the organisation which you're taking over. I think if you come into us and give us what you can, that would be most appropriate. And then partway through the process, we would hope that you can bring together that full picture of your organisation and the one that you're taking over in order to kind of take it forward into the final stages of the process. So that's perhaps around August time, we'd be hoping that that's in place. So what I'd say is give us what you can on your organisation to start with, and then that merger can be part of your ambition to scale, and we can look to bring that data together later on in the process. Then on the CUSO question from Jonathan, Stockport Credit Union, we are absolutely interested in CUSOs, and again, we think this is a potentially really powerful way for costs to be shared and back office functions to be shared, so as not to duplicate costs across the sector, and to come up with a sustainable model. If you have a proposal for development of a CUSO, please come into the process and we'll look at it. And then the other one on collaboration is regarding the credit unions for Greater Manchester Group. So I think this is a more interesting question. It's a more nuanced question because it doesn't all the questions are equally interesting. It's a more nuanced question because it sounds like it's more of an informal collaboration as opposed to a direct merger. On that one, what we'd like to see is any formal partnerships that are coming out of that, both in terms of either merging or working together and becoming one organisation, or sharing back office functions directly. If either of those aren't in place, I think it would be more appropriate for you to apply as one organisation, but with the context that you're part of the Greater Manchester Group. Because for our support, we will eventually need to look at what legal entity we're supporting and assess that legal entity on its merits as a single entity. You're on mute, Sasha, I think.
Sorry, there are a couple of things I'd take. Just picked up the one in terms of the focus in terms of the affordable credit lending, and I think the key thing, just in terms of answer to your question, is the focus of our funding is very much around serving people in vulnerable circumstances and really addressing the area of the gap. In sort of shorthand that I pinched from Neil Alexander, it's really looking at organisations that are typically lending for washing machines rather than kitchens, because it's that area in terms of the vulnerability demographic that we've been specifically set up to target. So we recognise that often you will have a sort of a cross-subsidy model within organisations, but we are looking for organisations that are predominantly serving the marketplace where there is this significant gap. So that's why we ask for quite a bit of quite a bit of data on that, Anna. And I think, and so you're asking lots of really great questions that maybe are less direct to the programme specific. So maybe we can direct you to report, and I'm happy to have a conversation offline on that. Wanted to then just draw in the questions from, I think, Lauren, in terms of the tailored package of support, in terms of what's available. I think the key is that the support may be in one or more of the areas. I think that we've recognised that sequencing is important, but maybe Tom, you can talk that through. And then also, I think that then to move on to Chris's question, just in terms of views in terms of ranges of equity tickets, because I think again that's a sort of that's the how long is a piece of string question. I think that's very much based on what's your growth plan say you need, rather than us saying, well, we're planning to write X amount. So Tom, do you want to just pick those two out?
Yeah, sure. So on the tailored support, we're not being prescriptive up front around the idea that one organisation can get support on one area, and we can be flexible as to what grant areas. So whether that's the markets and customer insight in conjunction with, say, the operational excellence area, that is more than possible if those two areas both require work and are needed to get to a foundation to then go on and scale. So we will look at where your organisation is across these different areas, and work with you to identify the most appropriate support therefore. So hopefully that's helpful, and it's definitely not one of 5 areas only. And then to take Chris's question on the quantum of support, you won't be clear on the kind of quantum potentially available for an individual organisation, and we're not either at this point, and we're not being prescriptive about that either. Sasha outlined the funding that we have potentially available across the programme for organisations that are right for it, and we welcome your ambitious growth plan, and we want to work with you in more detail on what would be most appropriate in terms of a quantum from Fair for All, potentially from other co-funders to help you meet that growth plan. So that's probably a question that would come in the kind of latter stages of the process, Chris, as opposed to right now. And then
Tommy, you go. Sorry, I was going to build on it. You carry on.
Sorry, I just noticed one of the questions from Glenn around the intensive process and journey before I hand back to Sasha. So in terms of the intensive process, so it's not an intensive process up front, we don't think. It's a detailed application form, but it's not intensive in terms of us having lots of conversations and kind of working on a growth plan with you. It's intensive at the point that you're accepted onto the programme. So just to be very clear on that specific question. Sasha.
Brilliant, thank you. The only thing I was going to say is I think it's really important, just sort of building on Chris's question, that we are very focused in terms of using our funding where availability of that funding is scarce. And that's specifically why we're not putting it into debt funding, but saying actually the scarcity in the market is both equity funding, so that you can actually have a resilient balance sheet that then would look attractive to a mainstream lender providing lending capital lines going forwards. So that's why we're not providing debt capital, and then also grant capital, where that is really enabling you to invest in the systems and capacity to be able to scale across the 5 areas. And so I think that's where being able to look at your growth plan and to be able to have a really clear idea of where is your gap, what is the catalyst that is needed for you to be able to deliver on your plans, and what support would be beneficial to you through participating on our programme and having access to deep expertise in each of the areas that would really help propel you to the next stage of your growth. So I think if you can approach it with that mindset versus going to a funder for some money mindset, then you'll be in the right place. Because I think the other thing that we are asking of people is that anyone that's participating on the programme, if we're giving grant funding, that any tools that are developed are made then available to people across the sector. So very much looking for a collaborative mindset versus I just want to grow my organisation. So that is really important in terms of the mindset that you bring onto it, and also that particularly for those who are ready for equity funding and investment, that there is an expectation of really stepping up to a leadership role within the sector to help pioneer new areas to really support the growth of the whole sector. And as two examples, Diane Burridge has done some fantastic work at Moneyline in terms of customer personas and journeys, and is now working with our lead on markets, consumer insights and product design to really push that forwards to develop marketing data and consumer insights that can actually be made available to the whole sector. And Angela Clements at Fair for You is right now embarking on an in-depth impact reporting to help in developing of an impact reporting standardized methodology that could be used across the whole sector. And we are collaborating. There are a number of people, particularly in the credit union space, who've done some great work on that. So we're collaborating with lots of different people in that space. So I think hopefully that sort of just gives you just that frame, that if you frame this as an organisational development programme where there will be access to appropriate funding and grant support to allow you to deliver that, that is probably a really helpful framing for you in terms of going forwards. And so I'm hoping that gives you a little bit more in terms of how we're intending to make sure that those who aren't part of the programme are getting insights that are coming out of it and tools as we develop them, so that the sector at large can benefit, but equally that we're not spreading ourselves too thin as we're helping people to scale and grow. I just wonder whether, Tom, it might be useful developing on the question around the support in the 5 areas, maybe just to give a little bit more of an example. I know we had them in the report, in the case studies, but maybe just an example of the sorts of things we are supporting with grant support, because I think sometimes that really helps people in terms of moving forwards.
Yeah, sure. Of course. So in terms of the 5 areas that we've identified, the first one there is markets, customer insight and product design. As Sasha described, one of those examples of work there is customer persona analysis to really understand your customer base and tailor product development to what they need. Also within here could be support for the development of, say, a marketing strategy. And you can see how the logic of that marketing strategy being used for your individual organisation then potentially pulls to a wider number of affordable credit providers through the process. On the operational excellence area, it could be things like a technology roadmap. So looking at your current technology strategy and what approach you take to acquiring software and what that long-term plan is and working with you on that. It could be things like working on collections and underwriting and developing shared services on that. On the governance, leadership and talent area, this one's definitely more nuanced, but we've got the idea of developing a sector-wide leadership development programme, which would give specific coaching and support to ambitious leaders to go to that next stage of growth and manage a growing organisation. And then we're also looking at talent secondments from outside the affordable credit sector into the sector to help with areas where the expertise might not be all there quite currently. And then finally, on the funding, finance and investment one, that could be in relation to the development of financial models and corporate finance structures to enable an organisation to put that bedrock of a financial model in before going on to a growth journey. But this isn't exhaustive at all, and what we want to do with this programme is really, for those organisations that come onto it, look at what specifically could be really helpful. And just to give another example, one of the things that we're working with one of the previous organisations on the programme on is a piece of research around the benefit of linked savings with employers and linked credit with employers and using the payroll mechanism there. So that research will both look at the benefit of it and then how to develop employer relationships further to penetrate further into a workforce. And that's an example of a piece of research and a tool that we want to make available to the whole sector through open source on our website when it is available. I just noticed there's a couple of questions about what exactly we mean when we say that the process is intensive and what that entails. So Kate, I wondered if you could come in on there and just give a quick overview of what we might expect in the stage after the organisations come onto the programme.
Sure, thanks, Tom. So I'm first of all, apologies for the length of the guidance, which is, I think, a weighty 20 pages. But the reason for doing that was that we had some feedback from the first pilot program where people said they really wanted a bit more clarity in terms of expectations up front. So what we've tried to do in that guidance document is set out what it is that we'll be asking you to share with us at each stage. And to Tom's earlier point, we've kept the expression of interest as light as possible. And then the subsequent stages are all by invitation. So the obligation in terms of what you need to share with us is really dependent on progression to those subsequent stages. That document essentially sets out both the attachments and the financial and other data that we'd need to see from you. And I think it's fair to say that particularly during the proper diligence stage after the information request stage, there'll be lots of discussion with you and your leadership teams, members of your board and so forth. And at the point that we make a decision that we do want to invest with you, there is a degree of intensity to how those agreements are reached and how we, to Sasha and Tom's points, make sure that the way in which that investment is made into your organisation is done in such a way that it can also benefit other organisations across the sector. And there's a reasonable degree of detail in getting that balance right between how we're able to support the cataclysmic growth in your organisation, but also make sure that that investment is leveraged for the wider sector. So I think those who were on the initial pilot programme gave some reflections on it, which is in the report that Temi shared in the Q&A earlier. Many of them, I think, said, yes, it was intensive, but we really valued the independent review and the inputs that we got from it. So I hope that's a kind of helpful overview.
That's great, thanks, Kate. Sasha, were you going to look at a couple of the questions?
Yeah, I think there's a good one from Sheena from South Manchester Credit Union, just in terms of imagining how we can really influence the wider market to change. So I think maybe I'll talk a little bit more about that. In terms of theory of change, we're very much approaching it from the perspective, certainly if you look at mainstream financial services and in how they approach people in unpredictable lives, unpredictable circumstances, to a large extent, they withdrew from personal lending post the or small personal lending post the financial crisis. And a lot of that is just being able to sort of really understand how they do that. How do you actually serve people well rather than treat them as risk to be managed? and also mechanisms to recognise what is their core strength and how to refer into others. So we're currently having discussions at a number of levels. With the affordable sector, it's very much, right, let's help the affordable sector scale and grow, build on what you already do differently, but actually set yourself up so that you can be appropriately capitalised as a sector, and to be able to really sort of at a sector-wide level be able to look at the key things that will actually transform the sector overall. So that's from having robust business plans and financial models that would stand up to investment in the mainstream markets, through to be able to have much more sophisticated markets and consumer insights to really effectively target, through to being really digitally enabled and having appropriate governance. So that's sort of proving the model within the sector is the first stage. Out of that, we're continuing to involve what we're calling the code of best practice of, look, if you're operating in this space, serving this customer group, this is what great looks like. And so we've set out the affordable credit code of practice, which you'll have seen within the documentation. We're then having ongoing discussions with the FCA, with the Money and Pension Service, with Treasury, and also with mainstream financial services, just to actually really help guide them in terms of that transformation as to what great looks like, and to start to sort of shift the practice, and really using the insights from programs like Women on Boards and Fair Trade and other significant change programs as to how over time you can actually shift the standard of what's normal, if that makes sense. And I think that we're really keen that people on the program, you will have great experience and richness in terms of what you think works and what doesn't, and what are things you think, well, if only we could. Those sorts of things are ones that we want to really draw out and catalyse across the sector, and that's what we're talking about when we're asking leaders to step up. I think the other thing, just in terms of the governance section, that's worth drawing out, I think most of us know if you're scaling, then often what you need from a board is significantly different to maybe at the early stages of an organisation. And one of the things that we are actively looking to support is governance reviews of boards, and then being able to support in terms of a talent pool of people from a wider experience in terms of financial services and stronger networks, so that we actually start to really build this deeper understanding of how to serve this group well, and we're building connections between mainstream and affordable providers as we move forward. But if you take a look in the report in terms of theory of change, that gives a little bit more. But I think that the key thing is that on everyone on their own, it's really hard to influence wider market change. Working together and drawing out themes, drawing out best practice, and showing that it is possible to do this really well, and to serve this group really well and not lose loads of money, is probably the best way that you can actually shift in terms of the marketplace. But really, that'll be one of the things that'll be fantastic to get insight from people on the program on. Nigel has a comment in terms of CRM suppliers working with the objectives of the programme. I don't know, Tom, if you want to just pick that one up, because obviously we don't have Jonathan. Jonathan Turner is our lead on technology, who is very much looking at the whole technologies that underpin and the architecture of what's needed, and working with providers as to who are the different providers, what's needed, and to be able to really develop options. And we've got a report that hopefully we'll be able to sort of get out in the next month, which is drawing some of that together. So we're very much working with lots of different providers based on the insights that we've already got as to the technology needs across the sector. I think that I'd say at the moment there isn't a one size fits all, and it very much I think that we would be naive to say, oh, if we can just develop one platform that everyone can use, that it would work. It's become very clear that it wouldn't, because it depends where you're starting from. But what we're aiming to do is to give people a pathway as to, at different stages of your development, what is appropriate, and to be able to, as part of the operational excellence, to be able to give support in making sure that you're on a digital journey that is actually appropriate, and then where possible identifying what things can be developed and applied sector wide. So I don't know, Tom, if you'd add anything further to that. I think just that we're working with loads of suppliers at the moment, so we're inundated with suppliers wanting to work with us, which is great. They've been very generous with their time, but it does help mean that we're not sort of going one supplier focus. We're really trying to get the richness of what different providers can bring in helping us develop the programme.
I was just doing a quick review of the questions, Sasha, and I think we've got to most of them at this point, and I know we've taken an hour of everyone's time, and perhaps we should move towards wrapping up at this point, but just say that if there is anything else, then inboxes are open, and you can get all of us through the programs at fairforallfinance.org.uk inbox, and I think Sasha will close off, but just say thank you everyone for your interest in the programme, and we do appreciate that it's a lot of work to come into it and work with us, but we think it will be a valuable process for everyone, and we certainly found that from the feedback of the ones on the pilot programme. So thank you for that.
Yeah, and I think probably the one thing that I will mention is that one of the things that we are aware of is that there are organisations that are on a transformational journey to get to a path to sustainability. This programme in itself probably isn't the right one for you at the moment. We are aware of that need, and we're looking at how we can actually develop a sort of a pathway to sustainability programme that's appropriate. And we're just trying to strike a balance, because our job is to be rescuing failing organisations, and equally it's really important that organisations that are serving areas that are underserved, who have got some great things going for them but haven't yet figured out how to get to a sustainable path, that if there is something that we can actually do in that space, I think that will be helpful. But we are in the process of developing that. So look, everybody, thank you so much for the time on the call. I don't know if there's a sort of a feedback way, whether we're able to get sort of feedback from you, whether it's useful and we've been clear enough in terms of our questions. If there are things you think we haven't been clear enough, if you could email us, because then we can include that in terms of our Q&A that we will develop on the back of this call. But everybody, thank you for your time, and we are a small team who are working incredibly hard. So if you do get in touch and we're not back to you instantly, it's not because we don't care. It's just we're trying to work as fast as we can, which I think you can probably all recognise in the worlds that you're in as well. So thank you very much, and have lovely Wednesdays.